that's where Eric said that I should join you guys to discuss. But that's the only. I'm not getting a lot of calls about it or anything.
Oh, really? Interesting.
I'm getting calls from clients,
Yeah.
but not really from realtors about it.
Cool. Like,
Hi,
yeah,
everyone.
now?
Yes. Hi, Crystal. How are you? Hi, Colin. How are you?
Good. How are you?
Good, good, good. Thanks for asking. I really appreciate you bringing on the call with us. I think Crystal was just filling you into some of the details, and I see we're live on Facebook too, which is awesome. We've got about 60 people on right now. It is 1 p.m., so it is our typical time when we start. So to give you a little bit of an insight into for everybody that's coming on board, and when we've talked to a lot of the real estate agents, the discussions of deferred mortgages has really come up a number of times from their clients as well, because they're wondering what it's going to take, and then their media has really hyped it up quite a bit, because media has been talking about banks are making money from the deferred mortgages, so it's not right, and they need to fix this or whatever it is. So it really even creates more of a curiosity perspective from a consumer end, that this maybe starts to become a question, and then agents are being asked. So what we wanted to do was develop a landing page that we're going to allow the real estate agents to shoot to their clients. They're going to send it out to all their clients, and then their clients can essentially enter some values into that landing page, which is their property, current residual or current remaining balance on their mortgage, their interest rate, and some other data that we need. But then after looking at your email, Colin, I realized that that is more of a complex thing to do than anything else, because of some banks are offering different kind of offers from other banks. So we would also have to figure out what bank they have, and then we have to figure out what structure those banks have. So I completely understand that's a very difficult thing to do. And I truly wanted to kind of come on because we've had clients saying it's a great idea. And unfortunately, based on what we discussed so far, I don't think it's going to be possible for us to be able to create that landing page. But I would love to be able to provide all the answers to the questions that agents might have about deferring mortgages. And it's going to be a little difficult, I think, because of the fact that different banks, different rates, different things. So it's going to be a little hard from that perspective. But we have Colin here, who is a mortgage agent, and I'm sure that you guys might have other questions that are related to the current market, state of the market in a general sense. Colin, I've got some questions for you while we get our clients also on here as well. If you guys have any questions for Colin when it comes to deferred mortgages, I'd love to also ask Colin some questions about specifically the market right now in terms of what banks are doing, what other lenders are doing when it comes to mortgages. But if you guys have any questions, please ask them in that chat, and then we'll get to each of your questions as we progress. We're also live on Facebook, so anybody who's on that Facebook chat will monitor that chat. Crystal, can you monitor Facebook? And we can, okay, perfect. Awesome. So Colin, I don't know if you had a chance to introduce yourself yet. Since we have about 82 people now, I'd love to get a chance for you to introduce yourself.
Sure. Yeah, I'm Colin Shea. I'm a mortgage broker. I own a franchise with Mortgage Alliance called Mortgage Alliance Performance Group. I've been a broker for 10 years and owned a franchise for pretty much that whole time. I'm kind of based out of Toronto. I have about 10 agents that work for me, and then I do business on my own as well. And yeah, awesome. And I've been in the industry for like 15 years or so.
Awesome. I really appreciate that. That's great. One of the first questions that I have, so you mentioned, and I caught a part of it where you said that you haven't had too many people ask about deferred mortgages. Are the banks causing any problems when it comes to people asking for deferred mortgages? Are they making it very difficult for them to do that? Is there anything that you can share that might enlighten agents when it comes to this specific scenario?
So no, the banks are being very pretty easy about it right now. Pretty much every lender, especially A lenders, big banks, and then the other like insured lenders are offering 3 months, no questions asked, pretty much, like just like literally an email saying I can't keep up with my mortgage payments due to COVID is enough to get you 3 months off. And I've had some clients come to me, and I've been able to kind of push them through a little faster with certain lenders. The only thing I would say, so I would say the banks are being very understanding, and it's a pretty easy process right now. If you log into whoever you deal with for your regular banking, like I know I bank with CIBC, and like there's pop-ups everywhere asking like, do you need help with this for COVID or blah, 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 blah. So there's tons of avenues through the bank's portals. But I don't know if any of you have tried to phone a bank in the past few weeks, but that's a very slow process. They're all really backed up. So I would say use the online. If they have an option online, use that first. If not, I would say email them, the bank, give them, your mortgage number, tell them exactly what you want to do. Try and give them that information up front. Phone calls are just like, I was calling the bank, my bank this morning to change something with regards to like online investing stuff, and I was on the phone for 2 hours on hold, and I eventually just missed so many calls I had to hang up. So I would say steer clear of the phones, because that's not the most efficient way to communicate right now. Email and use online tools.
Okay, that's awesome. So anybody that you know at the bank that might be possibly an email address that you could possibly communicate with, that might be a way. And so it is as easy, essentially just shooting an email. Now, when it comes to just a quick overview of an understanding, we don't have to be exactly precise. You kind of gave me some details in an email. So if I choose to defer my mortgage for the next 3 months, do I have to make any payments for the 3 months? Do I have to pay you the interest, or just no payments at all for the next 3 months?
So they're basically just taking those 3 months of payments, and it's just to free up the cash flow, right? So you don't make any payments on your mortgage for 3 months, and they're just taking the interest and basically just adding it to the principal on your mortgage, right? Okay. So yes, you're paying interest on that interest over time because you've increased your mortgage balance, right? Right. But as I showed you yesterday in my email, like, it's not really a ton of money. If you were to defer for 2 years, then sure, that would really start to add up. But for 3 months, it's not. Personally, I don't think it's something that should factor into your decision. And personally, I think it's fair because the banks, absolutely, the bank is taking a real cash flow hit right now. When you have like 5-10% of your clients not paying, like, that's how they make money. So the fact that they're gaining a little bit extra interest over time on that, to me, is not a big deal when they're offering that service with no questions asked. So
that's absolutely. So I'm a little surprised, actually, not even asking questions in that perspective. I would have imagined them wanting to kind of confirm that, hey, I want to make sure that you really qualify for this. Can you show me your income? Can you show me what's happening in terms of it? They're not even asking for any of that.
No. I've done it for
across the board. Okay.
Yeah. So the other thing I would suggest is, if you did your mortgage through a broker, or even like whoever you did your mortgage through specifically, if it was a road rep for a bank or an independent broker, go ask them first, because we'll probably have an idea with that lender as to what the fastest avenue is. The banks have all sent us updates, and I'm sure they're all emailing clients and mailing clients updates as well. But like, for certain lenders, it's actually faster. I can just email them on the client's behalf. I don't even need like an email from the client. I can just email customer service and say, this person's out of work and they need a break, and they'll do it. So they're not asking for any documentation at this stage. So
what about on an investment side? So let's say I've got 2-3 properties that I've purchased as an investment, and some people might have the properties purchased through a holding company. Some people might have it under their name. Am I able to just email the bank and say outright, if I own 5 properties, I want to defer my mortgage on the next 5 properties, all 5 properties at the same time, or they have issues with that?
I haven't seen that scenario yet. It's been mostly people, with their own mortgage that can't make that payment. But since they're not asking any questions about it, like, I would imagine they'll just give you the 3 months, and after that, I'm sure they'll start to ask questions, right? It's kind of that April because people would have started this process in March, so it was probably more for their April payment that they were deferring. So it's April, May, June that is, for most lenders, the window that they're forgiving. And then after that, all of the emails and stuff that I've seen have said, after that, we might ask for confirmation of employment. They might ask for whether people are collecting the CERB. Who knows what they're going to ask for at that stage yet. I haven't seen any communication as to what's going to happen at the end of that 3-month window yet. I think all the banks are waiting to see, what happens.
Yeah, where this goes and how
society
does
at
it
that
really
point.
go. Yeah. Awesome. That is great. So we do have some questions from people. I know, Crystal, there's been questions in the chat. There's been questions in Q&A.
Yeah.
So we'll try to get to all
Sure.
of them. Do you want to point me to start from one, Crystal?
Yeah,
Is there,
well,
yeah,
there
you
is
wanna read
one. There is a couple on Facebook that we have. Is when they defer the mortgage, is the interest that they pay on that deferral the same as their mortgage rate, or is it a different interest rate, or is it all dependent on the bank?
It should be the same interest rate. I haven't seen anything where they're adding any sort of penalty or extra interest or fees or anything like that. It's just most bank mortgages have had this built into it already, right? That's been a selling feature for a lot of different mortgage products, that like they have this skip a payment option or mortgage vacation or whatever they call it. Some of the big banks have advertised it on TV over the years. So it's been part of mortgage contracts for a long time. It's just we've never seen this many people do it at the same time. But there's with every lender that I've seen, it should just be same interest rate and then just tacked on to the back of your mortgage.
Okay, and I'll add on to this because there was a question: is this going to affect credit ratings in any way?
No, it's not a missed payment. Like when it's this scenario, it's not going to show up as a missed mortgage payment, because if you just don't make a payment, don't call anyone, and don't have enough money in your bank when they pull the payment, that would definitely be a missed payment. But these scenarios are built so that they don't affect your credit.
So you have to let them know. You can't just not pay. You have to let them know, and you have to go through the process, whether it's through a phone call or whether it's through an email, or whether you have to have some kind of confirmation that they've accepted that and they're going to defer the mortgage for 3 months or whatever. Can you say defer it for a month instead of 3? Can I choose how long, or?
All I've seen is the banks coming so I've done it for a couple people through some lenders that we deal with more directly. Like when it's a big bank, like a top 5 bank, as a broker, once we refer the client there, they kind of take over, and we would need the client to sign a form to do any communication ongoing. But with like First National, MCAP, some of the other big non-bank lenders, they're fine to deal with us for that process, mostly because they're so overwhelmed right now, especially in those first couple of weeks. Like I had a couple clients message me because they'd messaged the bank and hadn't heard anything back for a couple of weeks, and so I was able to kind of scoot them through a little faster. But that was just the process time. Every bank had to figure out how to make people work from home, and all at the time where they were getting insane amounts of business and insane amounts of customer questions. So it was a tough transition time. Things have eased a little bit there, but
good. Yeah, I can imagine the number of requests that come in. Go ahead, Crystal.
Yeah, so kind of like a spin-off about that, where it's not affecting your credit rating. Is it going to affect, so someone had a question here about it affecting if they wanted to buy another property. So if they deferred their mortgage payment, and let's say for 2 months, and then on month 4, they wanted to move and get a mortgage, will it affect their capability of obtaining a new mortgage with these deferrals kind of marked on their account?
So I can't speak to how I think people are going to look at things in the future, but I would say that if you're back to work, right, like that would be the big thing. You'd have to be back to work, and then they would treat you like a normal client. There's no negative rating on your credit, all that, and any of those sorts of issues. So as long as you did it right in the process, I would assume that you'd be able to just port your mortgage and increase it, or do whatever you were planning on doing. You'd have to be back to work.
So I'm going to ask a question here. Actually, it might be unrelated to this specifically, but it's related to the situation that we have. And that is, I'm on Facebook quite a bit, and I'm hearing a lot of agents. When I say a lot, I over-exaggerate every single time, because I see 5 agents might ask a question that to me might be too much. But the question came up a couple times, or a comment came up a couple times, where they're saying the clients that purchased the property and the closing is, let's say, going to be in the end of April, the banks are asking for re-verification of that they have a job at that very point. Is that still happening, or is that happening right now?
So the bank, like during the approval process, they're continuously, or they're checking in before closing type thing?
Correct. So if the properties, it's already closed, everything, bank had approved the mortgage, and everything's supposed to close, but banks are now asking that the client has to verify that they still have a job, they're not laid off before the closing happens.
Yeah. So here's how it's been through the past month. Okay. So
Okay.
in the beginning, when things first happened, if you were approved with the let's say the big players, right? So the top 5 banks, the big A lenders like First National, MCAP, CMLS, like the big ones. There's lots of little A lenders that people go to for really low rates and things like that. I
Right,
can't
right, right,
speak
right.
to what
Yep.
all of them were doing, but if you were approved and you purchased a house, say like March 1st, and it had been approved by the bank, and especially if you'd submitted all your income documents. If you hadn't done any of that yet, then it's a little harder. But
Right.
but if everything had been approved, and then April 1st you lost your job, and you're not closing until May 1st, pretty much every bank will actually kind of honor that commitment.
Okay.
So they would, especially if the deal was insured through CMHC or Genworth or any of the insurers, the insurer was kind of backstopping those situations. Now, if you bought a house in March 1st and it's closing May 1st, and you didn't even submit the application until mid-April, then that's a different story, right? But they were honoring those deals that they'd approved, and approved income docs, even if the person had lost their job. And I had it happen on a couple deals where they asked for an updated pay stub, and they asked to do a verbal on the job, but they actually said it was an insured deal. They actually said, even if he's lost his job, it's fine. We just need to know.
Right.
We want to know
Okay.
how we're closing this deal. But every deal that I have in my pipeline right now, every time we make a change, every time we want to switch amortizations, anything that I have to contact the underwriter about, the response is always with the first question: are they still working?
Right. Okay.
So that question is coming on every deal constantly.
Yeah.
And right now, everyone's being very sympathetic about situations, but at a certain point, we're not going to be giving mortgages to people that aren't working forever, right?
Of course, yeah. And if
that's going to swing, but for now, because it's also new, people are trying to close the deals that are in the pipeline, basically.
That makes complete sense, and fully understand that. I think maybe there's a possibility that since the question ultimately comes to the agent, because maybe the mortgage agent is asking the real estate agent, hey, can you confirm that they're still working? Or if that's a relationship, then maybe the agents are worried and saying, well, what should I have my client say? And what should be the scenario there? So I can understand that. So but it's good to hear that the A lenders and the banks that are the big banks are allowing this to close regardless of whether the person still has a job or whether they're currently laid off or temporarily off. I mean, that's been huge in the last little while, and hopefully this ends soon so we can all go back to work and we can all continue on our merry way. But awesome. Crystal, let's continue with some of the questions. Sorry about throwing that curveball in there.
So we have a question from Wade. He's asking, are the banks?
So Crystal, I gotta cut in here a little bit. We're having a little bit of a hard time hearing you. I am. Colin, are you also having a little bit of a hard time hearing Crystal? Yeah.
Let me just do this. That might help you guys.
That's
that better?
Yeah. Oh God. Okay. Yes.
So from Wade here, he's asking, are the banks only giving the option to basically add the 3 months to the end of the term, or can you increase your mortgage payment? So keep the same term, but just have the mortgage, the monthly payments increased.
I don't know that they're increasing the term. I think they're, from everything I've seen, they're just adding the interest to the mortgage, so the term would stay the same. Maybe some banks are doing it differently. So are the banks adding too much? I mean, yeah. If you were to just increase your payment, right? Any interest added, if you were to increase your payment, would just pay that off faster, because any extra payments that you make go specifically, well, they go to principal, but that interest has become principal effectively, right? Because they've added it to the mortgage. So if you were to just increase your payment after that, it would help you pay it off faster for sure. But it's really just not that much money that it's going to be something that I think it should affect your decision. If you're having a cash flow issue, then take the vacation or skip a payment option for now. It's not going to hurt you in the long run. That's going to make a huge difference on your life.
Okay.
After the 3 months, people are going to have to deal with like what's happening in their future, right? If both applicants work in restaurants and we can't have restaurants open for a year, then, that's going to change things. And it's also going to depend on whether you had an insured mortgage to begin with too, because the banks are a lot of this is just the banks right now, but insurers have all sorts of other programs for helping people keep their home and things like that. So I would say if someone is getting close to the end of the 3 months and they still aren't working, and there isn't a timetable for when they're going back, they should speak to both their lender and do a little bit of research on what their insurer allows, because one might be better than the other.
Okay. So there's a question here. I guess it's more of like somebody that may have been, everyone has different information coming from different sources. So kind of relating to the same sort of topic, just, confirming that, are some mortgages going to be required to pay that full 3 months after this is done? I guess in the States, they might be doing that, I guess. I'm not sure.
Yeah.
But in Canada, no? Okay.
No. I mean, that would just, maybe a B lender or a private lender or someone like that might have an option like that, but who can not work for 3 months and then after 3 mons just have all that money in cash, right?
Exactly.
So, yeah. So if anyone's doing that, I don't know. Those are the people we can go after, but it should just be that you add the interest to the mortgage.
So I have a question from John here, or a comment. What he's been seeing is that homes over 600,000 has taken a dip in terms of interest, but the homes from 300 to 600K has gotten more attention in terms of mortgage activity. What have you noticed specifically?
So this is not the Q&A, Colin. Yeah. So if you click on the Q&A button, it will open up the Q&A.
Oh, yeah.
And it's the very first question on the Q&A.
Okay. What I've been seeing is that the homes in interest rates.
This is what I'm thinking as well. Is it John? Is it interest rates that you are referring to? So you're seeing lower interest rates in properties that are 300,000 to 600,000, and higher interest rates in properties that are over 600,000?
No, in terms of application.
Oh, in terms of applications. So the number of applications that you might be seeing, Colin, in terms of how many people are coming in. Are you now seeing more applications for properties from 3 to 6 as compared to over 6?
No. I mean, like anything that was or is on the market right now, is mostly people that have already bought, I would assume, right? So it's just luck of it. I don't think that anything that's on the market right now is there strategically. It's out of need, right? So I haven't seen anything like that.
Yeah, personally, I've seen 3 houses sell in my immediate area. Who hasn't been walking around their neighborhood in the last little while? I think I've walked in the last 3-4 weeks more than I ever have walked before, and you see the signs, and we're seeing sold signs. Like we're seeing houses. Some houses are selling before they are others, but it's the ones that are priced right are selling fairly quickly, and the ones that are not even priced right, honestly, one of the homes that are on our street was way overpriced. It was on the market for a little bit longer, but ended up selling for 50K under, which I still think was a little bit overpriced, but they're still selling. I mean, they're still selling. Like Colin said, I think these are people that have to buy. They've already sold their home and they're in a need. They have to make that decision, either rent or they're just buying right now. So I'm guessing that's what you're seeing as well, closing, Colin, that those are the transactions.
My clients that have bought are all people that were first-time home buyers or didn't currently own. So they've had power for the first time in this market for the last 5 to 10 years.
Right.
But yeah, and most of the situations that I've seen are people that previously bought, because in Toronto, especially, most people were buying before they sold because you knew you'd be able to sell your house so quickly. So people that bought and then are now forced to sell, and
Right.
so those are the effectively like distressed deals because they have to sell. And so,
are you finding those deals where people have already bought and the it's coming up, they have to close on their mortgage? Are you finding that they are now in panic, and have they been lowering their prices, or have the properties been able to sell based on what's coming out of the market because there's enough people buying that supply?
I mean, I think there's still Toronto is kind of different, I think, than the rest of the GTA in that to participate in the Toronto real estate market, for the most part, most of the people that would be buying are currently working from home. They haven't lost their jobs for the most part, because to buy in Toronto requires an income level that usually means that you can have a job where now you can work from home and you haven't lost your job. It's not often that two waiters are buying a house in Toronto together, right? Like, so most of the buyers, unless they've lost a lot of money in the market, are kind of still willing to buy if they don't currently own and don't have to deal with a sale. So, like, I mean, the one situation that I saw right when things changed was some first-time home buyers that had been looking in the like 1.2 to 1.4 million range, and they ended up buying a house off someone who needed to sell because they'd already purchased, and it was comparable to all the houses that they'd seen in the 1.2, 1.4 range, and they got it for $975.
Right.
So, yeah, I mean, I think you're going to see some lower prints in this time because of those effectively distressed sales. But I personally, I'm not judging those as to like that's what the market's going to be at the end, because it's hard to compare right now when people can't walk through a house, right?
Of course.
Most people want to actually walk through a house before they buy it, so they'll just wait.
Yeah.
Wade said there that so payment will need to go up to keep the same term. Your payment shouldn't change. It's just your amortization would effectively get longer, right? So your payment amount can stay the same. Just like if you have like a capped rate variable mortgage, you're paying the same payment, but the proportion of that payment that's going to interest increases. So the amount of money coming out of your bank account is the same. It's just a little bit more that's going to interest than principal than it would. Costing
you a little bit more at the end of the day. But again, when you sum it up, if you have 15 years left in your mortgage, you're not spending a lot of money to really offset those 3 months of payments. It's really reasonable. Yeah.
Like the numbers that I gave you yesterday, I'll just kind of sum it up for everybody, that it was assuming someone had a $300,000 mortgage, and they were, I believe, 2 years in. They had a 3% fixed interest rate that started on a 25-year amortization. So a very like generic scenario, and they had 3 years left on their term. The interest that gets effectively added to the principal, the cost to carry that was about $60 a year. So the added cost to have skipped a mortgage payment for 3 months over the 3 years was $180. Now that was using a simple interest calculation, not like not how mortgages are actually calculated, because it's a lot more complex to do it the other way. But it should actually be cheaper doing it the other way. And like we don't really need to dissect $180 over 3 years to figure out what the difference is, right? Like if it's 200 or if it's 150, I don't think it really matters.
I think this is where some of that confusion
right now, and you can make a $180 payment extra payment if you want to save yourself. But
makes sense. I think this is part of the confusion. It really makes it a little bit difficult for us to envision. I think, Crystal, if we can go back to this time when we discussed this, if we could have our team create some kind of cheat sheet, some kind of like really quick scenarios of here's a mortgage, here's a payment, here's what extra you're going to be paying, so we can kind of make it into a picture, and maybe we can send that as a PDF to our clients, that they can send that out as a PDF document, so we can have some kind of information there. So Wade commented here again, so it'll be longer amortization from 15 to 15 years over 2 months. Love it. That would be great for clients.
Yeah, it's like, a lot of times when people refinance or even switch their mortgage, they don't line up the amortization exactly as it was. Like if you had 19 years and 7 months left and then you refinance, most people would probably refinance into a 25 or a 30-year am, but you probably wouldn't take a 19-year and 7-month amortization. A lot of lenders don't offer like splitting it up that much. They'll say take a 19 or take a 20. So that little change in your amortization is not going to change your life, right?
Yeah.
Like it's all about dealing with the short term right now, and the rest will sort itself out.
Makes sense.
Yeah, I have a question here from Simon. I deferred 2 mortgages that I have, one my residence and one as an investment. If I want another property, will I be able to get that mortgage? And will I need, like how much down payment would they require? Would they require more of a down payment because it would be an investment property and they've already had to defer 2 mortgages? Or we, again, don't know what the future has to hold with the impact this is going to have.
Yeah, I mean, like, so, yeah, we don't really know what the guidelines are going to be like after this to like how, if banks are going to treat someone that took a vacation differently. I don't think that they will, given the circumstances. If there weren't these circumstances and you were just every year taking a mortgage vacation, that might be viewed differently. It wouldn't affect your credit, but that institution would see that, right? And be like, oh, maybe these people have an issue every year making a mortgage payment. Maybe we don't want to do that. But I would say if you went to a different institution, they wouldn't see that you have taken a mortgage vacation with your other lender, right? Like that's not going to hit your credit report.
There's no central place.
So you could go to a different lender and then you wouldn't have to address that. But most lenders these days require a lease and bank statements to show your current rent, right? And so you can show the lease, but you can't show the bank statements showing that that person's paying rent. So that might affect you in the short term qualifying, because if your tenant isn't paying, then it's hard for you to factor that rental income in to qualify. Now, if you don't need rental income to qualify, then it shouldn't matter. That make sense?
Perfect. Yep, that makes sense to me. So I have one here from Harbinder. They were looking for a home with a client before COVID, but could not secure one. Now his income has dropped by 20% due to COVID since last month. Which income would be considered for a new purchase? Can he get a mortgage based on income before COVID or average of previous and now?
Okay. I mean, so every lender is going to ask for an employment letter and a most recent pay stub, and pretty much every lender is going to need that to be dated within the last 30 days of either the date that the client submitted the application with the lender or today. So they're probably going to see the current income amount. And most lenders are doing verbal verifications on pretty much every job right now because they want to know what the details are with regards to that. So my guess is you'd have to go on their current, whatever they're making currently. There are, on the B lender side, they're looking at deals for people that have lost their jobs, and especially people that have purchased and are stuck and they don't qualify with a bank right now because they've lost their job. So the B lenders are looking at those scenarios and trying to come up with creative ways to fund those mortgages, even up to 80%. B lenders don't do 5% down or high ratio financing. So it's just 80% would be the max they could do. But yeah, the B lenders are trying to come up with solutions for those people. Those are very tailored to the exact scenario, right? It's going to depend on what your exact job is. See, I was seeing someone posted this, so I think
yeah, so I just wanted to kind of share this with everybody. So this is posted as a link on the chat, and it's actually pretty cool. So you could specify what your monthly payment is, and this is with RBC, what the remaining amortization is, and then what your rate is. It'll tell you what it'll cost you for that, and then information here a little bit below. So this is great. This is actually what I was thinking about. But then if it's a little bit different with different mortgages, different banks, it just makes it a little more difficult.
Yeah, like, I mean, from your perspective, like, honestly, I would just refer people to, again, like I said in our email, like, all of the banks have these tools that are specific to their mortgages. Cause like RBC I think calculates interest monthly, whereas a lot of other lenders calculate interest semi-annually.
Right.
And so, you know, like there's and the reality is a lot of people don't even know like what their remaining amortization is, what their
Right.
current mortgage balance is, what interest rate they have. So like,
Right.
you know, if especially if they can log in under their details, and
Yep.
if banks have it that could auto populate, that would be even better. But I think you're kind of better to let that client's institution be the one to quote what the costs are.
Yeah, for sure. No, you know what? We don't want to have wrong answers out there. So I'm going to send this link to everybody as well, so that you guys can see it. Anybody that wants the link, that's the link from RBC. I'm sure that other banks have it as well. And maybe even in your email that you send off to your clients, you can find all the links for all the different institutions. And maybe, Crystal, we could do this. We can find all the links for our clients. So we can actually email it to our clients, and they can email them to their clients. And again, provide some value. All we're looking for here, Colin, is to try to make the agent's life a little bit easier, compile some of this information for them, and then be able to have them feed that directly to their clients. So that's the idea. And are there any more questions, Crystal, on the side that we haven't really gone through yet?
Question about the
Colin, yeah,
CRB there. If a buyer has applied for the $2,000 government help during this COVID-19 situation, does it affect on getting mortgage approval in the next month? Historically, banks don't use any income like that. Like, so if you're a plumber and you get laid off every December or something like that, and you have EI in your history, they'll never use that EI. Even if you were injured and collected EI for half of last year, or the people that go to school and collect EI while they're going to school, banks don't use that income. So I don't know whether they're going to be using the CRB income yet as far as qualifying people. I would doubt it because it's not permanent. Like, banks either want to go on a 2-year average of what if you have variable income, like you're self-employed or you're a commission salesperson or something like that, they want to go on a 2-year average of your income. If you're salaried and you're guaranteed income, then they want to go on that salary. The CRB income is a temporary thing, so qualifying people on that for the future is tough. So that's the kind of where we're stuck in between right now. Is are you going to go on a $2,000 because that person made more money historically, or are you just going to wait until they go back to work because they might not be able to go back to work?
Right.
So.
So I have a more of a question. So with respect to the deferral payments, because they're really just passing it for everyone right now without very many questions. So would it make sense for somebody who maybe doesn't need that relief to still apply for it, to save and bank that money for the time being, to leverage for something else? Or would there be repercussions down the road for doing something like that?
I don't see there being repercussions really, because I mean, like I said, pretty much every mortgage from a top tier lender has a skip a payment option in it anyways. And I mean, I remember bank ads on TV saying skip a payment so you can go on vacation. So like, you know, as long as you've been paying the mortgage on time, historically, that option is open to people. But yeah, I guess if you foresee that you might lose your job, and you want to save money now, might make sense. But personally, I'd say you're probably better to just like keep paying until you can't pay. But I guess it's gonna depend on every person's unique situation too, right? So, so yeah, like it as per that calculator, it's gonna cost you more in interest, right? So like, I had a few clients messaging me thinking it was almost like a handout, you know, like I hear banks are giving back mortgage payments. Should I do that? And I'm like, are you out of work? No. Then I don't think you should do that. I mean, we also run the issue too that there is a bit of kind of responsibility as a part of this society, that like if everybody takes a mortgage vacation, then the banks are in real trouble. So if you can pay, you should probably pay your mortgage right now and take a skip a payment option later when it's a little easier, because the US is seeing a potential for actual defaults of the the bond holding institutions and like higher up the chain because of so many people defaulting,
Right.
or not defaulting, but taking a break. So I don't think we need to spur that on anymore, right?
And I mean, I would have hoped that banks would have made some kind of prerequisite, if that's truly the case. If they see that this is happening constantly, maybe they should verify, hey, are you still getting payments from your employer? If you are, you don't qualify.
Yeah,
If you're
I
maybe getting
agree.
payments from CREB, you may qualify. And so that's maybe percentage-wise. If your payment from your CREB payment, CERB or CREB, I think, is
CERB, doesn't matter.
yeah, if it's equivalent to what you were making with your employer, maybe you still don't qualify. So I really hope that if they really do, if they do see an issue with this, I'm guessing the primary reason why they're not really making it any kind of requirements on it is primarily because they can't handle the number of questions going to come up. There's no way they're going to be able to handle it. So that's just the nature of the beast right now, that they would rather take that loss than have to deal with the backlash of people complaining when they can't deal with a number of requests, especially if we have to go back and forth a few times for us to get this information that we need. So I definitely don't envy the position that they're in right now, and don't envy the position that anybody's in right now that's coping through this.
For sure. I mean, there's like, first off, it's only 3 months, right? As of right now, for anyone that they've just blanket approved, it's only 3 months. And in Canada, we have a big percentage of our mortgages are insured through CMHC, Genworth, and Canada Guarantee, and that's kind of what they're there for, right? Like, I mean, people pay mortgage insurance, and they have the money saved up exactly for this type of scenario, right? So I think it's probably a good thing that the insurers are actually, because if any mortgage that was insured, the bank would just basically would still be receiving the money for that mortgage from the insurer. For sure, they'd be using the insurer in these scenarios. So yeah, that's what clients have paid for CMHC insurance for over the last, I don't know, 100 years or however long it's been around. And so in the short term, the insurers are probably the backstop for a lot of it. In the longer term, it will, get a little harder to do.
Absolutely. And we have Eric, actually, and I wanted to do this towards the end to kind of, if there are no more questions, where I'd love to get people that want to contact you directly if they would like to help them with their mortgage. How can people reach you? How can people get a hold of you? Do you have a website? What's your email address, and what's your phone number?
Yep. I can copy it into the chat, but then also
that would be great. Yeah, that'd be awesome. And we also email, I know in the email that we sent, we have Colin's information in the email as well. We have your name, we have your company name. I don't remember if we have the phone number. We can include this information on our AgentLocator clients group as well, so that people can find that information there as well. Yeah, Crystal, is there any more questions that we really didn't get through yet by any chance?
There was one that said he has an investment properties. Some tenants stopped paying rent even though they have jobs, and just wanted to get away without paying now because I cannot evict them because of the situation. So they're assuming they can get away without paying for at least 8 months. Any suggestions from Mortgage standpoint on that?
I mean, that's a landlord and tenant issue that you're having for sure. I mean, you could take the mortgage vacation to, help yourself with the losses in the short term for sure. But beyond that, like that's right to the landlord and tenant board to get them to help you out, hopefully. But I mean, as we all know, dealing with like all the laws are very tilted towards the tenant's favor, right? So, but I would say as soon as you can, get those people out, because
well, you can start the process now from what I gather, so that when it does, like if they're just, in this situation where they're, I've heard it before where they're just like deciding not to pay. They have money coming in, but they feel for whatever reason that they don't have to pay, that you can't, and I could be wrong, so somebody correct me if I am, that you can initiate the process now for non-payment.
You just can't actually,
you can't actually evict them. And then so would this be more of like, in this sense, would it be something if you had mortgage insurance, whether it's through the mortgage, the bank or the mortgage company party mortgage insurance? Is that kind of like the route they would want to take a look at with respect to this as well?
No, I think this would just be the same mortgage vacation thing that everybody else is doing, because especially because they're not really asking a lot of questions anyway. But I mean, the banks would rather do the 3-month vacation than have people start defaulting and missing payments right now, right? Like they don't really want to start. I mean, historically, the banks foreclosure rates are crazy low, right? Like they're not like less than 1% for all of the major institutions, right? So, and foreclosure is very expensive, so nobody really wants to go that route. So the 3-month vacation is a good way. It's kind of like the temporary Band-Aid, and then we can get to, if people need to get foreclosed on, then that'll happen at a later date.
When it comes to some of the mortgage rental and having tenants, and one of the things we actually discussed, I think it was Anthony who was on a call with us last time, and one of the things that he said is, I mean, we understand that a lot of times we want to get help from when the tenants are not paying us, but a lot of times we could really deal with them a little bit differently, where we understand they're humans as well. So if we come on to their emotional side to try to actually get them to pay, and say, get them to understand and say, listen, you know, we truly don't have the money that you think we have in order for us to be able to have you not pay payments. You know, can we make some kind of arrangement here? I understand this is a little bit hard for you, but I understand it's also hard for us. Can we say 80%? Can we get 80% of what the payment is? Because we're having a hard time here. I hope you understand that. So I think you have a better chance of playing on that side and an emotional side of the individual, because again, they are human. And let's not forget the nonsense that they've been spreading all across Toronto and other areas, where they're saying, you know, skip your April payment. And they're playing off of that. They might be playing off of that. So I think you can also play on your side and show that impact, show what this is doing to your family and what this is doing to your overall situation. And if they truly aren't in that situation, I can't imagine them being those types of people. I mean, some people are. What are you going to do? You selected them. Don't forget that. But work with them as best you can and try to sympathize from that perspective. I think that's probably a better route than trying to evict them immediately and trying to go on the route, hey, I'm going to do this to you if you do this. I think you're going to have a little bit of a better chance of getting that money. So I hope that helps.
Yeah, and you're right about the misinformation in that, like I said, I had a lot of clients coming to me asking, just assuming that it was kind of some sort of freebie from the bank. And for sure, there's a lot of tenants out there that just think, oh, well, you don't have to pay your mortgage, so why do I have to pay my rent? But that's totally not what's happening, right? Like, you are still being charged the interest that you are for the next 3 months. It's not going away. You're just not paying it in cash right now. That's it.
So it hasn't been just, you know, I've actually watched Kevin O'Leary live on TV say that he's suggesting to most of his companies that he owns very small percentages of to call their landlords and tell them, next 3 months I'm going to be not going to be paying you. Sue me if you want to sue me. This is what I mean. This is on live TV that millions of people hear. So what do we expect for these individuals to do then really follow on that? But again, we have to be able to play on the other side of this, to not try to go after them through the legal courts, but to try to go after them, at least attempt first going through the next way and saying, hey, please, let's help each other out here and try that route before you go the other route. So great.
Perfect. I have one more question that was on Facebook, and it's nothing to do with mortgages, but of course bank lending through credit cards. So whether we have a mortgage or not, the majority of us do have a credit card of some sort. Do you know from a lending perspective if they're doing any kind of deferral payments on credit card fees or anything like that?
I don't know specifically, but I think any interest-bearing accounts like car loans and things like that, they're working out situations for people. I've gotten a lot of stuff from my bank and seen a lot of other stuff out there that they are deferring payments or waiving things like that. So I mean, there's just so many different credit card providers out there. Again, like if you have a credit card with a big bank, that might be different than if you have, I don't know, some little company credit card. There was a couple of things just that I spoke about in the last call that I did with another agency, just about I think the only thing that I haven't mentioned so there's two things that I haven't mentioned just about the process with regards to mortgage things right now.
Okay.
One is appraisals. Pretty much all the appraisers aren't going in properties anymore. If anyone's seen that, they're doing kind of a advanced to drive by. So they'll let whoever's in the property know that they're coming. They'll go to the property, they'll look around and look in the windows that they can see from. They're not bringing ladders or anything like that, but they're looking in the windows to confirm that the pictures that might be on MLS, or if there's no pictures on MLS, then pictures provided by the current owner, kind of match, and they're the same property. And so they're just doing like a site inspection that way. But appraisers are also seem to be very backed up and slowed down by this right now because the whole process is kind of throwing everyone for a loop. So everything on the mortgage side is slow right now. If a lender normally has a 24-hour turnaround time, it's probably more like 2 or 3 days right now. Document review takes a lot longer. So if you have a client that's bought, if you have a client that is closing soon, make sure that they've completed the whole process and that they're on broker side, it's usually referred to as broker complete, but directly with a bank, just that there's no conditions outstanding, because there's a lot, the banks are very slow right now. So leaving anything to the last minute is not a good idea. And I would suggest, if your clients, especially if your client's dealing directly with a bank, I'm sure you've all had this happen where, it's 3 days before closing and the appraisal's just been ordered. Like personally, I just ordered the appraisal right away, especially right now. But we're going to see some lower sales in this, especially in this short-term time. Right. And those sales are comparables for any other transaction going forward. Right. So if you have a client that's bought a house today and they're not closing till July, get that appraisal done now, because that house is probably going to get valued less in, 2 months than it is today. So get everything done as soon as possible and try not to make too many changes later on, because when you make changes, that sometimes can lead to a reevaluation or things like that. So things done now and no changes means the bank really doesn't have a lot of options to, come back at you and ask for more things. It's when you go back to the bank and say, hey, can I get a bit more money, or can I get this, or can I get that, that right, they can relook at things. So that, and then the other thing I just wanted to say quickly was about interest rates. I get a lot of calls right now and a lot of people talking about how because the government lowered interest rates are so low right now, maybe it's the time to refinance, and interest rates are still low. But what a lot of people don't realize is that as the government was lowering interest rates over the span of that 2 weeks, the banks were all increasing interest rates. And so when prime was at 3.95, there was a lot of lenders that were offering prime minus 1%, prime minus whatever. That changed so quickly that most lenders were only offering variable rates at prime plus, like 0.2%, 0.3%, prime plus whatever. So as the government was bringing rates down, the banks were just going the exact opposite way. Now, as always happens, there was a big kind of reaction, and then they swung a little too far. So rates are now coming back down a little bit. And so to answer the question there, what the best 5-year fixed rate is now. So for insured deals, you're still kind of in that maybe 2.6, 2.7 range with normal lenders, maybe 2.6 to 2.8. And then on variable, things have come back down a little bit. There's a couple lenders at prime minus 0.2%. So that would be, prime is now 2.45. And so prime minus 0.2 would be 2.25. And then the fixed side is kind of somewhere in that high 2 to low 3%, depending on what scenario are, whether you're insured, whether you're, what the scenario is. But that super low was right when the bank was decreasing, or when the Bank of Canada was decreasing rates. That's when rates kind of hit rock bottom, and they've swung up since then. So did appraisal value property a lot lower than sold price now?
So we just so that, because people not everybody sees the actual message, we just have to kind of repeat it. So did appraisal value property lower a lot lower than sold prices now, 15, 20%?
It's just going to depend on what the comps are. Like my client that bought for $975 might have there's a lot of comps out there to support their purchase price, but they might hurt some other transactions if someone's appraising the neighbor's place.
So if there's a lot of sales that end up happening, and currently, have you seen? I mean, have you really seen a lowering of property values on a global basis right now, or there really hasn't happened on a huge basis where, you know, let's say out of 100 transactions that are being closed in a month, in the month of April, what percent of them do you think are being closed, you know, 10 to 15, 20% lower than what the market value, let's say, was previously?
I think it's too hard to get that data yet, right? Because all this stuff started really only a month ago, where it really started to affect the industry. So the numbers that you'd see for March would only be like the first 2 weeks would be fine. That, you know, the third and fourth week of March was still, you know, I don't think things were selling like too undervalued, right? I'm sure there's a couple properties that sold in that time that took a hit, but
not a lot. Yeah.
March data would probably be fine. And then the April data we won't know until at some point in May, and there's going to be so few transactions, right? That it'll be hard for all of those transactions to be comparables yet. I think it's still too early.
Yeah.
I would say I did hear that from a lender yesterday that an appraiser submitted an appraisal, valued the property, and said in their appraisal notes, I wouldn't go more than 70% financing on this property, which I've never heard of in my life. And to me, it's not up to the appraiser to be commenting on what the lender is doing. But I would also say that in this situation, dealing with, you know, banks that you know, mortgage brokers that you know, appraisers that you know, people that you know aren't going to put silly words like that in a report is your ideal situation. I wouldn't go to an appraiser I don't know right now if I don't have to.
Certainly, yeah, and I think many times, you know, the emotional state of the individual is going to really determine how they feel that day, and that's unfortunate, especially these days, because there's so much negativity going on in the world that we can't control those things. So completely understand that side of it. So definitely deal with people that you know, and people are going to help you get the transaction done, because that's what we want to do at the end of the day. Anybody who's going through this process right now, as Colin is saying, is doing it because they want to and have to. So we certainly don't want to create any kind of problems for them by having to put them through any kind of hoops. So Colin, I really, really, really appreciate your time. Eric, thank you so much for referring Colin to us. This is definitely a lot of information. It's great information. We're going to put it together and sum it up as best we can for our clients, and we'll pass that information over to you guys like we typically do. I don't know if I don't think I've missed any more questions. We have here, we posted Colin's note here where people can reach out to you. And if anybody has any questions for us afterwards, Colin, we're also going to add you. Are you on Facebook as well?
Yep.
Okay, I'd love to add you to our Agent Locator clients group. We don't allow self-promotion there, but anytime there's a question that comes up that's you know, related to mortgages, we'd love to get your input, love to get your help. We have a decent number of clients there as well that may need help. So I would really appreciate that. And I'll have Eric, if you could please send Colin an invite to our group, because I'm guessing you guys are friends on Facebook. That would be awesome.
Perfect. Thank you so much.
Great. You're most welcome. Great. Thank you all so much. Well, have yourself a wonderful day, and stay safe.
You too. Thanks.
Bye.
Have a great day.
Bye, everyone.